So today we'll be reading about the profitability ratio. The profitability ratio is simply the profits generated on the investment, and there are various ratios associated with it and based on two criteria, that is first being based on overall return and the second being based on owner's point of view. The first we will be reading about from the point of view of overall return. The first in this ratio is the return on investment. So, return on investment basically measures you to understand the total investment performance with respect to total investment you have done. So, it basically measures the total profit or the return generated on the total investment. This can be investment or this can be sales, and this is always calculated on percentage basis, so we will be multiplying with 100. So return on investment is simply the net income divided by total sales or total investment into 100. The second being return on assets. So return on assets measure your total profit generated with respect to total investment in assets. So we will be calculating the profit after tax or net income divided by total average assets. If the time period is 2 years, so we will be taking the average assets. Otherwise, we will be taking the total assets into 100. This is also calculated on percentage basis. The return on capital employed, which is said to be the ROCE, return on capital employed. This basically measures how the return is generated on the total capital employed. So the capital employed formula is, this can be said to be the shareholders fund plus the total long term debt. So this ratio measures the total capital employed, which is the shareholders fund plus the total long term debt.
And asset side.
From the assets side, we will be taking the total assets. So we will be taking the total assets and the current liability will be subtracted. So this will result into nothing but shareholders fund plus long term debt. This is also calculated on the percentage basis. So we will be multiplying with 100 in order to calculate the return on capital employed. The next being the return on equity. So this is being ROE, return on equity. Return on equity. So this is basically the profit that is available to the equity shareholders. As you know, the equity shareholders receive the profit after payment to the creditors as well as the preference shareholders. So the profit that you receive, the company earn, and then the payment to the preference shareholders will be done, which is said to be the preference dividend, and then we will be dividing with the shareholders fund. So the calculation of shareholders fund basically is the total paid up capital plus any additional capital plus the retained earning of the company. Retained earning and the buyback, which is said to be the treasury stock, will be subtracted because they generally reduce the shareholders fund. So the buyback will be subtracted. So return on equity is commonly used by the equity shareholders to measure the company performance with respect to their investment. Now we'll be shifting to other side and we will be reading from owner's point of view. So EPS, what is EPS? It's basically is earning per share. What the company is earning per share. This is calculated as net profit available for equity shareholders, and this will be dividing by number of equity share outstanding because it is earning per share. So we will be dividing with the total number of equity share outstanding to calculate the EPS. The DPS same will be the dividend per share. So the dividend payment that the company has done, So from the earning, the company pays dividend to the shareholders, the total dividend paid to the equity shareholders, and then we'll be dividing with the number of total equity shareholders outstanding to calculate DPS. The next being DP, which is dividend payout. So this is basically, if the company earns suppose 100 and it makes a payment of 40, it means that the dividend payout is 40%. So it basically is what the company pays to equity shareholders and what is earned. The ratio is measurement of this, and this is said to be dividend payout ratio. Thank you for watching.